Hey guys, welcome back. It feels good to be back in Texas, but it feels even better to look at the performance that we saw across the memory sector today. Because if we were waiting or looking for a confirmation to just validate the memory super cycle, today I think we got that with SanDisk's Investor Day performance. They delivered the exact validation that we have been talking about in this channel for months. SanDisk's management didn't just present a standard corporate update. They laid out an aggressive multi-year revenue growth model stretching out through 2030. They talked about unprecedented gross margins and a clear technology roadmap that will keep this company on the cutting edge for years to come. SanDisk just didn't send its own stock today to the atmosphere because it was up 14% today. And we'll go through that in a moment. But it lifted the entire memory sector with the performance and with the comments that they laid out in today's Investor Day. So Micron was up 4.2%. Western Digital was up over 7%. Seagate up about 5%, and SK Hynix, their ADR was up over 7% today in the U.S. market. So it was an outstanding day for the memory sector. We're going to get into it. I want to show you exactly the comments that SanDisk leaders talked about and what caused just the absolute surge across the entire memory sector today. Like I said, completely validated what we've been talking about. So we'll go through all of those. We'll take a look at what the impact was on the stock, what some of the analysts are thinking right now after that Investor Day. Are they re-rating the stock right now in real time? And then we'll take a look at how it's spilled over into Micron as well. What was Micron's performance? What are they doing right now in the after hours? And what were some of the key headlines that came out from Micron today? And I want to finish the video with just talking a little bit about a bull and a bear case. Can we keep this momentum going with the sector? What are the bullish points right now that shows we can keep this rally running with the memory sector? And what is the bearish case that maybe just have us do another look and just some cautionary points that we have to keep our eyes on in the market as we move forward? Because we know this sector has definitely had volatility over the last few weeks, even I would say couple months overall. So I always feel like we just have to have a strong conviction, feel bullish, but we need to keep our eyes on some of the headwinds that we could face in this sector. So that's what we're going to cover in today's video. Like I said, it feels great to be back in Texas. It's great to see the performance that we saw on the board today. But you know what? It would even be greater if you joined the channel. So if you like this channel, if you like the content that I put out, do me a favor, hit like and subscribe to the channel. All right, let's get started. I want to pull up the actual slides from the Investor Day today, and I will drop them in the description below because I'm not going to go through them all. There's 98 slides that they covered today. And if you have the desire, I didn't have a chance to listen to the full call. I'm going to do it tonight, but you can see, you can actually get the webcast. It's about 3 hours long, though. It's a 3.5-hour Investor Day presentation. They went through a ton today. So if you're a SanDisk investor, if you're thinking about buying the stock, if you need some more conviction about better understanding the future of this company, I would highly recommend that you not only go through these slides, which will be linked below in the description, but also jump on and listen to the comments directly from the leadership. It's 3.5 hours, but you can break it up over time. That's what I'm planning on doing. And I'll bring any of those key insights to future videos on the channel. But let's dive in. Let's just take a look at a sample of some of the slides I want to go through. So first, here was the agenda that they had. They want to talk about SanDisk in focus, the NAND flash technology leadership, NAND market update, AI infrastructure outlook, sustainable value creation, and then the next wave of technology innovation. So they covered a ton in this presentation. I want to go through a few of the slides, starting kind of with the big themes that they had for the presentation. It was delivering on their commitments, investing in the business, and then 3 imperatives for sustained value creation. So let's look at their invest in business first. So they have a multi-horizon innovation. We see this with their transformation from BiCS9, and they have a technology roadmap that takes them out to a BiCS13. The high bandwidth flash that you see is the third list. Clear kind of priority for them moving forward. And they also have the 3D matrix memory system capabilities across consumer, edge, data center portfolios overall. Key piece on the right is they have no debt. and they have significant cash reserves. And one of the things that they're going to do with that cash made the stock rally, and the analysts absolutely loved their direction they gave here. If we dive in and can take a look at further invest in business with some of the collaboration that they have, we know how tight they work with Kioxia. So their joint venture was actually extended out through 2034. The R&D scale between these two delivers technology and cost leadership. And between the both of them, they are the largest producer of NAND wafers in the world, with about 33% of the share, according to the Tech Insights NAND market research report, which was in the second quarter of this year. They also have an investment with Nanya. You can see it's for secured DRAM for eSSD portfolios. They have a 4% equity stake in the company. It's foundational for their business agreements, their business agreements, their long-term agreements, essentially, they have. And then if we look at their imperatives for sustained value creation, so this is what the company talked about. They want to increase profitability, through their long-term agreements, through their technology as well. They want to reduce the cyclicality. They're going to be very thoughtful about the number of bits, about the volume production and how it scales over time to ensure that they're not flooding the market at any time. And they want to have consistent revenue growth. And if I jump ahead to a few more slides, let me just jump to a couple that I want to see here. This was a headline that you probably saw in the news today, that they are committing to having growth in the mid to high teens every year through 2030. The investment community absolutely loves seeing this, and this is what drove the stock today as well, what rallied at 14%, and what we're seeing it continue in the after hours. And this is their roadmap overall. So in order to reach that mid to high teen growth per year, they have a 27% yearly average productivity, going from that BiCS5 out to the BiCS11 overall, with a 27% CAGR. You want to see they have a 54% BiCS generation to generation average bit growth per wafer, 5 nodes over 9 years. Growth primarily driven by intellectual capital, not financial capital. And then finally, I think the piece that I want to talk about here was just their focus today. So they talked about their innovation roadmap that they have. They talked through the NAND market update, the era of inference. It's a really cool slide in there. I encourage you to kind of take a look at it. When they did a pyramid of memory archetypes of what it was prior and what it will be in the inference stage, and it actually was pretty informative. Take a look at it. It's pretty cool. And then the business model, and then as well as the high bandwidth flash updates from the company. So tons of information that they covered in their investor day today. The takeaway for the market is they absolutely loved it. They loved everything that this company had to say. It was a clear catalyst moment for the company, but also a catalyst moment for the entire sector. And let me show you an article I saw here on investing.com that just pulled out a few of the highlights, some of the things we covered, but the author went on to say that the leadership outlined a highly optimized financial model, durable customer partnerships, and leading NAND technology roadmap designed to drive sustainable long-term value in the AI era. A few things. So they're advancing innovation in the age of AI. With a rapid adoption of AI accelerating storage inference transition, SanDisk is targeting a total available market for enterprise data center flash that is expected to reach 1.2 zettabytes by 2030. It's going to be delivered through what you see here, BiCS9, the BiCS10, and the high bandwidth flash. So they have a sustainable financial model that goes from fiscal year 2028 through fiscal year 2030. They introduced this comprehensive multi-year financial framework, optimizing the growth, the sustainability, and most importantly, the shareholder returns. And so from a revenue growth perspective, as I mentioned, mid to high teens, projected non-GAAP gross margins of approximately 80% over that time frame, and non-GAAP operating margins near 75%. That's even higher than I expected. I thought they would probably be closer to that, 60, 65%. So 75% operating margins, if they can maintain that out through 2030, that is just excellent execution for the company. And more importantly, the cash flow and the return to the shareholders. So they are anticipating that they have adjusted free cash flow margin of approximately 50%. And they noted that they are fully committed to returning 100% of excess cash to shareholders. So this is going to be the buyback program that we talked about last night, where SanDisk, I think, has a goal of reducing their float by 10% annually, which will drive up EPS for this company and make it even more of an attractive stock to buy, an attractive company for analysts as well, and just investors overall. They talked about how they've signed new NBMs with 8 customers accounting for 50% of the bits in fiscal year 27, 2/3 in fiscal year 28. And then they talked a little bit about just how they'll control the production of the bit volume to ensure that they're not going to flood the market. So the CEO clarified that while long-term target for input bit volume growth is in the mid to high teens, bits available for sale will vary to optimize profitability. That's a great sign from the CEO. And then finally, around the average bit growth of 54% for every change in their NAND technology. And to prevent flooding the market with bits, SanDisk will selectively reduce wafer output during technology node transitions. So again, very smart discipline for the company to ensure that they are not flooding the market. They are protecting their margins overall. So how did the stock do today? We know what it did. It's about 14%, a little under that. So it was up $183.82. So the stock crossed over the 1,500. It got up to 1,580.88. As you can see on the right here, the intraday high. It was absolutely flying today. We see in the after hours, it's up about another $9, crossing at 1537, 1538 right now. So fabulous day for SanDisk. For all of you that had conviction in this stock, because I know that was tested when it got down to about 1100 and it sure looked gloomy. Right now, your conviction has paid off. So you have to make a decision. Do you continue to stay with the stock? Do you do a little bit of trimming right now and put some profit in your pocket? Or are you holding because you think the stock will continue to grow? Let me show you a couple things that may help your individual decision. But we did see a flood of new price targets for the stock, all coming in today. A couple big ones. So Goldman Sachs put out a new target, a new coverage for SanDisk at $2,200. And Evercore also picked up a new position on the target. They're all buy, obviously. We have 23 analysts that are covering the stock. You can see 19 are buy, 4 are hold. But Evercore also put out a new price target today with $2,800 for SanDisk. Cantor Fitzgerald on the 9th of this month put out $2,900. Argus was $1,600, and Bernstein, their group there, put out a $3,000 price target on August 5th. So we're seeing a flood of new targets for SanDisk, new optimism and confidence in the stock. And today was a big help for the stock overall. But let's take a look at what it did to Micron. So we saw Micron was up by 4.23. Let me just, there we go, 4.23 today, $38.54. Micron is at about $9.50 a share right now. Got up to $9.78 today. So this was a strong day from Micron as well. And obviously, we've had momentum throughout the entire week with Micron. We just feel like we've been turning this corner on the bear market, and we're getting back into the bullish market. You can feel that undertow that is happening right now with all the capital rotating back into the memory sector, the positive news that is coming out across the board. And so 949.83 today, up over 950 right now in the after hours. We'll keep our eye on this as well as we move forward. If I look over here to the right, I did see earlier, let's see if it held, but Kioxia is up right now in their market, about 2.64. And let's see what Samsung and SK Hynix is doing right now on the Kospi. If I scroll down, we got about a mix. SK Hynix is up by 3.58, and Samsung is down by about a half a share point. So we'll keep our eye on that momentum. Will it kind of carry over into our markets at the opening bell? But today was a fabulous day from Micron. Let's enjoy it. And let's take a look at some of the headlines that came out. So we saw this one, Mizuho's latest top U.S. technology stock list. And so they went through the top companies, top technology stock picks, where they have 7 companies with high conviction right now for the month of August, I think this was, or just high conviction ideas across the sector. I won't go through them. It's Airbnb, Trip.com, Robinhood. But you get down here to number 5, which is Micron. So Micron's memory demand is expected to remain strong through calendar year 2027. Mizuho sees Micron as a key winner. The company is expected to see strong ramps in HBM again in the second half of this year, led mostly by their HBM4, which is now shipping to NVIDIA. Mizuho estimates the NAND contract pricing potentially is up 400% year over year, while DRAM could be up approximately 393% year over year. So you're seeing this as a high conviction pick for them. And then if we jump over to Cantor named their top 2 memory picks amid the semiconductor recovery rally right now. Any guesses on who those tops would be? Well, if you said Micron and SanDisk, you would be right. I actually read that headline. I thought it was going to be Micron and SK Hynix. So Micron and SanDisk is what Cantor has picked. And the reason is that Cantor named Micron as one of its top picks in memory and storage subsector. The firm views the memory complex as oversold following a 27% peak to trough decline. Cantor highlights the industry's convergence on long-term supply contracts, which the firm believes will structurally support margins across the entire sector. The company is expected to continue benefiting from broader industry shift towards the contractual supply agreements that Cantor expects to underpin pricing stability. And SanDisk maintains its position as Cantor's top pick ahead of its August 13th Analyst Day. Cantor expects management to present new business model contracts as a structural catalyst that will re-rate the NAND earning power and extend supply tightness throughout at least 2028. So that's another great kind of bullish sign and signal for these 2 stocks today when you're seeing them get named as the top picks and get named on high conviction lists. But let's jump over now and take a look at that bull and bear case that I mentioned overall. So I had a couple graphics made to help us walk through some of the factors we can look at that validate, that show us that this sector rally can keep running. And then we'll get into the bearish factors as well. But right now, the biggest one is contract visibility. So these multi-year customer agreements, they improve the pricing and the volume visibility. It reduces the cyclicality that we have seen before in the sector. We're seeing an AI data explosion, and this shift towards inference is exponentially growing the memory sector and causing even more demand. It's driving demand for HBM, DRAM, enterprise SSDs, and the mass capacity HDDs across cloud and enterprise. Supply discipline, it's what SanDisk talked about, but Micron is the same way. So is the HDDs. They are keeping a very close eye on supply. They are not going to just expand at a risky rate and flood the market overall. So AI-driven demand, it continues to outpace supply, and the executives leading these companies are being very diligent about the supply they put in the market and the pace of that supply growth. Margin expansion, we're seeing strong margin right now that looks like it will continue. When SanDisk says they're going to be able to maintain margins at 75% through 2030 with these contracts, it's a strong sign that this sector rally can keep growing. Record cash generation that we're seeing. So the capital returns, the discipline, the buybacks that we'll see overall, the free cash flow in this sector right now is a great sign. We all have the potential here for a re-rating. Greater earning visibility, durable demand, and supply higher through these cycle validation multiples. Wall Street is raising earning estimates and price targets right now on all of these companies. So we are in the midst of a structural re-rating across the entire sector. I won't go through all the ones at the bottom, but feel free to take a picture, look at it yourself of what I've called out. But essentially, the fundamentals are strengthening for the sector. Earning visibility is improving, and the rally, in my opinion, has room to run. We can get some more out of the bull run we're in right now. And then let's talk about the bear case. It was only important to talk about the factors we're seeing right now in the market that could cause a pullback for the sector. Because as it says, strong trends can change fast. These key risks, they pressure the memory sector, and they could pressure them in the weeks ahead and cause a meaningful pullback. Number one is the unproven kind of resilience of these long-term contracts in a scenario where we see a downturn. You know, these are relatively new contracts. They have been untested in a deep downturn. So customers may renegotiate, delay, or reduce orders if demand weakens. Minimum pricing floors may not fully protect margins in a severe oversupply environment. Geopolitical risk, so the risk from the Chinese providers, whether it's CXMT or YMTC, is going to be a continued headwind that we will have to face in this sector. Supply won't get there, but it's the sentiment in the articles that could drive downward pressure on the sector and on the stocks overall. The short bets and the macro AI fatigue. is a massive factor. So we saw today Michael Burry came out and made more headlines that he's doubling down, even putting more in his short position with Micron. We know his position is at 924. The stock is at 950 right now. So I imagine he's feeling a little pressure himself, but that is a headwind that we will face in the sector. And we're also seeing there's some pushback just in the local level around data center build out. I don't have that on the screen, but that is also just a headwind that we face. Extreme technically overbought metrics. If you look at the RSI momentum positioning right now, we're at extreme levels in many cases. Parabolic moves like we're seeing in this sector, we have seen this sector, they increase the odds of a sharp pullback, and large shareholders may take profits into strengths, causing volatility spikes. So that's what we have to look at, see tomorrow. End market demand uncertainty. So hyperscaler CapEx could slow if cloud growth or ad revenue moderates. Enterprise IT spend remains cautious. It could remain cautious in a slower macro environment. And inventory digestion or order pullbacks can distort short-term demand. And then finally, the macro and the policy risk factors. So this is everything from export restrictions, trade tensions, volatility and commodity costs can pressure profitability, and higher for longer rates or sticky inflation pressure could grow. So there's certainly a bunch of headwinds that we face overall. But guys, in closing, today was a day that for me, I think it just validates everything that we have talked about this sector. It was the catalyst moment that we are looking for today with SanDisk and what they shared and how it moved the entire market, because it just wasn't a corporate presentation that I mentioned in the beginning. This was a watershed moment for the entire semiconductor industry. By proving their pricing power, by proving the fact that they're going to have close to 80% gross margins out through 2030, the multi-year supply contracts, that technology roadmap that they have, showing that they're going to be here and they're going to stay with significant power and innovation throughout the end of the decade. SanDisk, it provided a rising tide today that lifted all the boats. It lifted Micron, Western Digital, Seagate, SK Hynix. It lifted the entire AI hardware sector in the afternoon session today, because we saw other associated companies move as well. So that's my take on today. I think it was the exact moment we were looking for in this trade. We got exactly what we were hoping SanDisk would deliver, maybe even a little more. But what was your take on the presentation today? If you saw it yourself, drop a comment below. Let me know what your thoughts were. If you saw some headlines that you want to share in the community, make sure you share them with all of us in the comments below. I love the exchange we have across the group here in Market Signal. But that's what I have for tonight. Hope you enjoyed the video, and I'll see you guys in the next one.